Thank you.
Okay, yeah. So I guess I'll start over then.
My bad.
No, you're good. Sure. Okay, so like I said, the market goes three ways. It can go up, it can go down, or this is called consolidation, as it's not going anywhere, right? The market is doing an uptrend, right? Typically when it does an uptrend, when the market does an uptrend, it doesn't work its way, it doesn't go straight up like that. It always works its way up, comes back down, gains momentum, retraces to go up again, comes back down, retraces to go up again, comes back down, and just goes so on and so on. Like I said, that is an uptrend. Think of it kind of like you're sprinting, and then, okay, you need a break, so you're gonna start cooling down, then you sprint again, you need a break, you wanna cool down so you can gain momentum, you sprint again. That's kind of basically how the market works. And just understanding that is gonna make you just that much better as a trader. I know it's helped me in the past. Sometimes what I would do, I'll be thinking, okay, the market goes up. I say, I'll be up $2, and then I'll see it go down, and I'll be down like negative $1 or something like that. I'll get scared and I'll close, and then I'll go back up again. You know what I'm saying? That stuff is what's going to dictate, knowing your market structure, knowing uptrend and downtrend. Like I said, the market can go down as well. The market's not going to just shoot down, right? What is it going to do? It's going to go down, right? Work its way up. Retrace. This is called retracement. Wherever the market works its way down, comes back up. That's called a retracement. Gains momentum to do what? Go down again. Works its way back up. Gains its momentum to go down again. So that is an uptrend on the left. That is a downtrend. I'm going to show you examples. That way you are not confused. So right here is a perfect example of, okay, cool. So focusing right here. Cool. So this is a perfect example of an uptrend. I'm going to highlight it for you so that way we're on the same page. Right there. So what is the market doing right here? The market's doing exactly what I said, what an uptrend does. It's working its way up, comes back down, retraces, works its way up again, comes back down, retraces, works its way up again. Price is doing what at this point? It's forming higher highs, right? These are higher highs. Right here, higher high. Right here, higher high. What is this? Higher lows. You guys see that? So what can I do at that point? I can draw a trend line connecting my higher highs and connecting my higher lows. Why? To get an outlook, kind of like where price is going, so I can predict future moves. I typically use array. So at that point, what do I know right here? I know that price is working up. You can put bottom one as well. As you get more experience, you can draw more trend lines that kind of give you an outlook of where price can potentially be going. Typically, like I said, I start doing my trend lines and everything on the 4-hour time frame. Let me show you an example of a downtrend so we're aware. I know this is like basic stuff for some people, but some people, like I said, they're not familiar with this. And just knowing this can be the difference between you getting in or out of a trade. So we'll cover that so that way we're all on the same page. So right here is an example of a downtrend. Right? Good example of a downtrend. So right here, price works its way down. Price works its way down, comes up, retraces, works its way down again, comes back, retraces, works its way down again, comes back, retraces, works its way down again, comes back, retraces, its way down. All right. You don't really have to count this one, but it's all the same thing. Yeah. So at this point, like I said, price is doing what? It's currently on a downtrend. So how do you know, okay, price is no longer in a downtrend? Has it broke market structure? Is it starting to work down? So that's when you have a trend line in place. All right. So we have a trend line going. So we know price, every time price comes to this trend line, what is it doing? It's selling. Right? Price comes right here, sells. Comes right here, sells. Comes right here, sells. Comes right here, sells. At this point, right, when price does what? When price breaks this trend line and comes back and retests it, we know what? That is a break in market structure. So what does that mean? That means it's no longer in the same downtrend. The downtrend is over at that point. Does that make sense? Using a higher time frame is going to give you this outlook to know that, okay, price is no longer in a downtrend. Price is working its way up. It's retested and it's starting to shoot back up. Now we know that it's no longer in the downtrend. It's out of our frame. You can actually move this right here, so that way you're not looking at that. So this is no longer in a downtrend. This is starting an uptrend. That's one key thing. Like I said, if y'all can knock that down, like I said, Jasmine's gonna go ahead. I'm recording this, so Jasmine will be able to send this over to you. What we're gonna do, we're also going to go through support and resistance and mark up the chart actually, so y'all can see what it's like to mark up the chart. Also, if anybody has any questions, feel free to, like I said, feel free to interrupt. I don't mind. I want to make sure everybody's on the same page. Okay, so one other thing, we are going to go over consolidation. So what's a good example? Okay, cool. So this right here is a good example of consolidation. Why? At this point, price is not really going anywhere. Price is just ranging. Another example of another word for consolidation would be ranging. That means price is staying in the same area. It's not really going nowhere. It's kind of undecisive. We are trying to avoid trading this at all costs. I think as you get more experience, you can trade it with bigger time frames. I'll show you all that later on down the road, but as beginners, you want to stay away from trading this. You want to basically be focusing on moves that are working its way down or moves that are working its way up. That's what we're trying to focus on. This is not the most ideal pictures that we want to be trading. Why? Because you can lose a lot of money in situations like this if you don't really know what you're doing. Because at this point, price is not really going anywhere. Like I said, as you get more experience, you'll be able to see where price is going, and then you can make money just depending on the higher time frames. But we'll get into that. That's what you do when you're more experienced. But just first starting out, I would stay away from consolidation. Is it pointless to trade in consolidation trend? Yeah, it's pointless if you're looking at small time frames. But like I said, I'm going to show you all a simple way that you can do. Like I said, as you get more experience, you start understanding. But I'm going to show you a simple way that way you can make easy money with consolidation. But you use the higher time frame for that. Okay, and then, so this is consolidation. Another word for this is ranging. This is another word for this as well, is when the market's moving sideways. Like I said, we are trying to trade uptrends, we're trying to trade downtrends. We're trying to avoid trading this when you first started off. Okay, cool. So what we're gonna do here, we're gonna actually mark up a chart so that way y'all can see what it's like. I'm a swinger, so that means I can hold trades for a longer period of time. But what I'll do, I'll mark up a chart on I will mark up a chart on a bigger time frame and a smaller time frame so that y'all can see it both. That way, the scalpers, the people that are scalping can understand, and that way, the people that are swinging can understand as well. One thing about this trading, right, you have to figure out kind of what style are you and what suits you best. You know, some people are more patient than others. Like I said, I myself, I can sit in trades maybe for a day. I've sat in trades for a week. But if you don't have that patience, you know what I'm saying, you have to realize, okay, I don't have this patience to do that. I want to make my money. I want to come in and make money out. Then that's when you start looking at the lower time frame. But when you want to look at the higher time frames are good for generalizations of picks. Swing, yeah. So swing trader, yes, is a whole trader. Scalp means get in and get out. So yes, you put that in the chat as well. So that's good for anyone that is confused. Swinging is holding trades. It can be longer for a day. You can hold it for a week. Scalping is intraday, so you're in and out by the day. Scalping, you're always using smaller time frames. Like what time frames are you using? Using the 1 hour, the 30 minute, 15 minute, 5 minute, the 1 minute. Swinging, you can use weeks, the days, the 4 hours, the 1 hour. Those are the bigger time frames. Why? Because you're trying to catch more pips. So the more pips you're trying to catch, the higher time frames you should use. That's something that anybody that's a beginner kind of should understand. Let's mark this up real quick. Now let's do another one, something that's better. Okay, let's do this. I have to clean this out anyways for the week. So what we're going to do, we're going to mark up on the day at first. So we'll mark up on the day, then we'll work our way down. This is called a top-down analysis. This is also another word for price tracking as well. So basically what you're looking for when you're doing support and resistance, I'm not sure. Hey, Jasmine, have you mentioned pivots?
No, I have not yet.
Okay. Is that something you plan on mentioning? Is that something you want me to mention, or you want to?
Absolutely. You can mention pivots. You can even mention HFX.
Okay, yeah, for sure. So I'm not sure if anybody here is aware of pivots, but what it is, it's a platform kind of similar to this for you to mark up charts. But the only thing it does, it makes things very simple for you if you're not really familiar with how to mark up charts. And honestly, marking up charts is what's going to make you the money. If you're not actually making solid markups, it can really be detrimental and you can lose money from it just from not putting yourself in the best positions for trades. What pivots does, it does the support and resistance for you. It tells you where price is currently at, whether it's overbought or it's oversold. That way, it kind of helps you if you really know how to use it. Is it necessary to set a stop loss when scalping? Yes, you always want to have a stop loss. Why? I've been in situations where honestly I've lost a ridiculous amount of money because I decided to take my stop loss off. You always want to go into a trade with a target of when you want to get out of the trade or whenever, how much is too much money that you're willing to risk. Risk management is the key because honestly this market can do anything it wants. I've been in situations where it's cleaned my whole account out just because I didn't put a stop loss. Falling asleep, not putting a stop loss, things like that is going to be detrimental to your career and also to your trading account. So I would always advise putting a stop loss. Always want to have a risk to reward ratio that's worth it. What do I mean by that? To be a profitable trader in the market, you don't have to win. You don't have to win 50 or 70 or 80% of your trades. You can win 25% of your trades, but make sure your risk to reward ratio it makes sense. What do I mean by that? Okay, cool. So if we were to, let's say hypothetically, we were to get in a sell. So I'm going to act like this doesn't exist right here. Cool. So at this point right here, price is doing what? This is just hypothetically if we're hopping this. Price is doing what? Every time price comes to this resistance area, what does it do? Price comes right here, it sells. Price comes right here, it sells. Right now, price is doing what? Price is forming a double top pattern at this point, and it's coming up to a resistance level. So what do we be doing in this case? We'll be predicting the sell, right? This is where I mean the risk to reward ratio comes into play. So let's say you're a scalper, right? and you're looking at smaller time frames, you're only trying to catch what, 20, 30 pips, right? So we just look at smaller time frames, that's fine. Let's say you're only trying to catch 20, 30 pips. You want to have a risk to reward ratio that's 1 to 30. What does that mean? Well, why do I say that? You want to be risking about 10 pips to catch 30 pips. Why? Because that means you don't have to win every single trade in order to be profitable. You just have to win 1 out of every 3 in order to be profitable. Just think about it. If we're risking 10 pips, right? Let's say we risk 10 pips on a 30 pip trade. It's depending on it. Yeah. So let's say we're risking 10 pips for 30 pip TP. Think about it. If we lose 1 trade, we lost 10 pips. If we lose 2 trades, that's 20 pips. If we lose 3 trades, that's 30 pips, right? All we have to do is win 1 trade to make that up. You see what I'm saying? Because that would be 30 pips. So we would have broke even. But then somebody would say, hold on, well, you're not a profitable trader. Well, yeah, I mean, I haven't won nothing, right? But I broke even and I only won 1 out of 4 trades. So think about when you have a 1 to 4 ratio or 1 to 5 ratio, or think about, when you actually start winning. So let's say we risk 10 pips, right? And we won the first time. So we won 30 pips, right? Let's say we lost the last time. We're still considered a profitable trader, right? Because we've net gained 20 pips, right? But we've lost only 10. Why? Because our risk to reward ratio makes sense. So although we're 50% for our trades, we're still considered a profitable trader. So you have to kind of understand that being profitable is more important than being having a high win percentage. Because anybody can have a high win percentage, but they're not being much profitable. Being profitable is the most important thing. So always want to have a 1 to 3 to 1 to 4 ratio. Why? Because that's going to give you a better outlook and give you more opportunities to win down the road. It will pay off down the road. When you're risking 30 pips for a 30 trade, that means you have to be right, more times than you lose, right, in order to be profitable. You never want to have a 1 to ratio. A 1 to 2 ratio is not that bad as well, but 1 to 3 and 1 to 4 is where you should be shooting at. Because that means you could lose all the time, but all it takes is 2 to 3 trades and you're up to the neck. So let's do this. Let's do this support and resistance. And hold on, please. All right, cool. So yeah, let's draw the support and resistance so that way everybody's on the same page about that. And I'll show y'all pivots as well. So like I said, for anybody that's struggling with support and resistance, I'm going to go ahead and show y'all as well how to do that. But for anyone that's struggling with that, I would highly advise getting pivots. It's an extra $20, but it's worth it. What's $20 when you can be using that to win your trades? It's something that you just got to invest in. I think it's very beneficial. I'm gonna clear some things up on how to use it. Like I said, I just actually started using it, and it's really updated my trading career. So I think it's something good. Okay, so the first thing I'm going to show y'all how to do support and resistance, and then we're actually going to go here so you can see it for yourself. And I'll kind of explain a few things that are on here. That way we're all on the same page. So right now we're looking at Euro AUD, right? We just drew a resistance level. Why was this a resistance level? When price came right here, it sold. Price came right here again, it sold. Price came right here again, it sold. Price came right here again, sold. Whenever price comes down here, right, what is price doing? It's consolidating in this area. It comes right here, it starts to buy. Price comes right here, it buys as well. This is consolidation. Whenever you see consolidation, that's a good indication that something is causing price to react at this level. It's consolidating right here as well. Remember, we went over consolidation. That means the market's moving sideways. It's not really going anywhere. This is an uptrend. That's a downtrend. This is just consolidation. I'll zoom in a little bit more so y'all can see that. Instead of market's not really going anywhere at this point. It's just going sideways. That's consolidation or ranging. Same thing with this. Market's not going anywhere. It's just sideways. Same thing with this one. Market's not going anywhere. Just ranging. Right? So that's a good indication that price at this level is reacting. It doesn't want to break through. It doesn't want to shoot down and break through. It means there's something causing this. Either there's a resistance or there's a support, right, that's causing price to react where it doesn't want to really break under this level. So that's a good indication of a support or resistance indecision level. Right there. Price comes right here, it buys. Price is consolidating. Price is consolidating. So all we need is about 3 to 4 touches, right, for it to be a significant support or resistance level. Right? We're going to do another one. What's another one? Right here. What does price do? Price comes right here, consolidates. Price comes right here, it taps, buys, and consolidates. Taps right here as well. And price comes taps right here. Y'all see that? It's another level. This is what's going to be, this is going to determine your trading career. If you knock this down and you understand this, then things are going to be really easier for you, and everything's going to start making sense. Price comes right here and consolidates. Price comes right here, consolidates, and then price comes and retests and consolidates. This is a significant level, right? Price comes right here, taps, works its way up. Price comes right here again, it consolidates. Fine. So I hope I see that right there. Cool. I'm gonna draw another level right here. Why? Because this is the bottom. This is the bottom of the trading zone. So if I was to get a higher time frame right here, so price comes right here, it taps, it consolidates right there. So it's pretty straightforward. So that is the support and resistance. I can make one more so everybody can see that. Price comes right here, consolidation. I'm just trying to draw everything out so you can see why I put in these areas. Once you mark up a chart, you don't have to mark this chart up every day. You know, I don't mark charts up every day. You just have to mark it up, and then it's solid for about 2 weeks. So look at this area too. So I was looking at this time frame, but I know this is a significant level. Why do I know that? Because I can back test, look back, and I can see price is ranging all through this level right here, and it's tapping this line. That's when you know your levels are adding up, right? If you back test and look past, and you see that price is touching the same levels that you already have marked up. You see that? Cool. So now what? For this, what can we do? We can predict the sell. Why can we predict the sell right here? We predict the sell because we know price worked its way up here. What did it do? Come back down. What did it do? Come back to this level right here. What does price do? Did when it came back to this level? All you're doing is repeating. The market's constantly repeating itself. Price came right here. What did it do? It sold, right? So we're projecting that it's going to sell again. Price came right here, sold. Price came right here, sold. This is a double top pattern, right? So for people that are just new, there's 3 candlestick patterns I focus on that constantly repeat itself. Y'all can let me know if I'm going too fast. This is called a double top. All it is an M. This is called a double bottom. All that is a W. Right. This is called a head and shoulders. All this is like a crown. This is called a inverted head and shoulders. I mean, inverse head and shoulders. This is just the opposite. It's just the crown backwards. So those are the patterns I really focus on. Keep in mind, this head can be inside. This head can be inside as well. But once you learn these patterns and you know them down, and then you add support, resistance, then you add the higher time frames, you'll be able to catch a lot more pips just from learning these patterns alone. Looking at the candlestick wicks, understanding candlestick formation, seeing how price moves. That would be what's going to need. So, okay, so how can we transfer this to pivots? Well, with pivots, you don't have to draw the lines. Everything's already halfway done for you. So all the support and resistance is already marked up for you. You don't have to do anything else. It's fairly simple. All you're doing is, like I said, now you're just doing your markups, drawing your trend lines, and now you're predicting where price is going to go. I personally use strategy 2. Why do I use, it looks like it's a new strategy. What is that? Okay, I don't know what that is. Looks like a new strategy. I don't know. I personally use strategy 2. Why do I use strategy 2? Euro AUD. Because at this point, what does it do? Price tells you, pivots tells you kind of what price most likely may do. Hardest line to fall above oversold conditions. Whenever price comes to this line, typically what is it doing? It's buying, right? It's already telling you that price is oversold. So now what can you be looking for? You can be looking for buys. It literally tells you right here, price buy, right? Stop loss. It's telling you exactly what price is most likely going to do. So looking at this, price is oversold, right? It's coming to a major support. SO is a major support. We could be looking for buys at this point when price comes down to this. For instance, price comes to overbought conditions right here, which is R8. Price is overbought at this point. We can look for sales when price comes. It's fairly simple. Like I said, price, strong pivotal reverse. So what does that mean? That means price can potentially reverse or it can retest at that area. What does price do? Price works its way up, comes back, retests this area, and then continues to consolidate. Same thing with this. What does price do? Price comes right here, tests this area, comes back, tests this pivotal point, and shoots its way up. So pivots kind of it makes things way more simpler, right? But you have to have the general knowledge of understanding what's going on here to transfer over to pivots so it can be that much simpler or simpler. So I call GBP AUD. No. I call GBP USD for any of those that caught that in the signal chat at that time. I'm going to show you why I called that. That was fairly simple. Okay. What did I know? So looking at this, we're going to do it 2 ways. We're going to do it through pivots perspective, and then we're going to do it from normal perspective. So this is, I actually still have it up. The crazy thing is we actually caught all of this. So we actually caught 180 pips on this one trade alone in one day. So why did I call this? I call this was a very simple trade. Why did I call this? Because I knew what? I knew price at this point came up here and it sold. So I just did the same thing I was going to do again. I knew price was looking for a sell at this point. Why? This is overbought conditions. How do I know this is overbought? Price has been buying for how long? Price has been working up and has been buying, right? Price was buying in this area too. It's getting to the place where it sold at last time. That's fairly simple. That's easy money, right? All you did right there was copy the exact thing it did. I knew price was going to come up here, but I said, you know what? I'm not going to wait for price to come all the way up here to sell. I'm not going to do that. I'm going to capitalize right here at this point. I'm going to enter the trade right here at this resistance level. Why? Because I believe that price is going to sell at this level, but just in case, I have a stop loss to cover it if it decides to come up here. Guiding the trade exactly at this point. Price ended up shooting down. We ended up catching 180 pips. If you held, some people caught 30, some people caught 50, some people caught 100, some people caught 150. It just depends on whether or not then you decided to get in and get out. Right now, price is buying. Why? This is oversold conditions. Price is oversold at this point, right? What has price been doing? He's been selling. He's been working his way down. It hasn't retraced at any moment. Right? So it's overselling at this point. So that's why price is doing what right now? It's buying. And that's why it's went for 31 pips. What would I need in order to get in this trade? I would need price to come down here to this resistance and support level in order to get in this trade. Why? Because I only want to enter off resistance and support. I don't want to enter off a trade just because it looks good and just because I already started working up. That comes the discipline portion behind that. Being disciplined enough to be like, okay, I know it's going to buy, but I didn't get the entry that I wanted. I'm going to stay out of the trade. That's being disciplined. Just because God forbid, you can hop in this trade right now. It comes back, retests this. Remember I said price, how price works. Price is going to work its way up for the most part, come back down, retest, and shoot up. No different than a downtrend or uptrend, right? But what people will do, they'll get in the trade right now. Like I said, the markets are covering from Sunday, so we don't know what Sunday has for us. Trump should be speaking here pretty soon. When Trump speaks, things are going to. I think he may have already spoke, but when he speaks, it can be manipulated at any time. That's why it's very risky. It's less risky when you're down here. Why? Because now you have a lot of room to work with, just in case price decides to fall a little bit lower. But when you're already here and the move's already been making, or it's in the process. If you hop in, you'll just be putting yourself at a disservice for if it decides to drop and shoot up, you'll be down 30 to 40, 45, or 50 pips. I'm not sure some of you don't want to be down 50 pips in order to make money. So that's being disciplined behind it and understanding that, hey, you're not going to catch every single trade. You don't force trades, you let them come to you. That's the only way to go about it. When you start forcing trades, bad things happen. And then at that point, you're not trading, you're gambling. And we're trying to avoid gambling at all costs. Gambling is not going to be good for the long term. Yeah, you may win a few times, but you're not going to be able to withstand the pain for so long. It'll be detrimental to your career, and you'll just be forming bad habits. Does anybody have questions? Anybody have any questions?
Yes. Can you hear me?
I can hear you.
What? I know, like everyone's kind of trying to like find their strategy. What strategy would you say that you use for when you're trading?
They say I just found this out. I'm kind of bad. They said it's called price trap. I just thought it was support and resistance, but they're saying it's price trap. So I'm using a price trap strategy. What does that mean? I'm using support and resistance to trap price. That way I can predict the next move that it's going to do. Kind of same thing. I know right here, price comes to here. I know this is a resistance. I know price at some point is probably going to sell. I mean, like I said, I do that, and I match that with knowing candlestick formations. I'm sure people have heard of the Candlestick Bible. I know y'all preached that very a lot in this organization. Knowing candlestick patterns, looking at wicks, looking for rejection, looking for the wicks are always going to tell you a story. You'll know that through looking at the Candlestick Bible. Just adding those things to your arsenal, honestly. Only entering off support and resistance. Why? Because that's going to give you the best area or the best chance. Think about it. If I was to just enter a random place, like kind of like right here, you're going to have to really know a lot of information. You're going to have to know the candlestick wicks. But if I was to do myself a favor and only enter off resistance or support, I already know what. If I'm entering off resistance, something is pushing price down already, especially when it's overbought or oversold. When price is overbought, something's pushing price down already because it's been buying for too long. Like I said, price is typically not going to just do this. It's not going to just buy straight up like this. It's going to have to come back down, retrace, and then work its way back up.
Thank you.
Make sense?
Yes, sir.
Yeah. And Go Live Christian teaches price trap. Yep, he does. He does a great job of teaching price trap. Like I said, support and resistance is your best friend. Pivots, like I said, is a great tool to use if you struggle with support and resistance, and practically gives you the answers. You just have to, like I said, put yourself in the best position to win and do the other part.
Also, guys, what he's using, as you all see, is TradingView. And TradingView is very, very friendly with, our products that we always use anyways. So I'll also make sure I add that to your roadmap as far as, tools to use to be successful. Basically, with TradingView, you just type in whatever currency pair that you're looking for or looking at. And then, as you see over here under his watch list, he can click back and forth. So the harmonic scanner will generate, the different currency pairs. But if there's something that you just want to trade particularly, like I always recommend finding one currency pair, mastering that, figuring out when that moves, things like that before you try to do a million at a time. You know what I'm saying? So take one currency pair, practice support and resistance with that. Definitely use your Go Live, because what he just showed you again was support and resistance. And like we said, Christopher Terry does teach that in the Go Live Academy. So figure out those times, and they're recorded sessions too if you miss it. But yeah, you can take those currency pairs, look at them on TradingView as well. It's just really important to tap into your products. And there's another question. She said, how did you get the red and yellow lines?
So that's just me changing the colors. I right click them, and I go right here and I just change the color. So just right click the line. The horizontal, I use the, so I can see a picture of this. I use the word, these are the only things I use. The ray, I don't necessarily use a trend line, just because why? I'm not trying to draw. I'm not trying to draw it like that, because I can mess up. So I just use a straight line, kind of array. It's more simpler. I just do that. That way, that's my trend line. So anybody can take a screenshot of that. Yeah, like I said, all the products and everything is there for you. I think the main thing is just being disciplined enough to say, hey, you know what? I want to actually learn this stuff, and taking the time out to learn and kind of listen to your upline as well. I know Jasmine's always available to help you as well. But really taking the time out your day to say, hey, you know what? I'm gonna make this a priority and I'm gonna learn this stuff. Because after you do it for about 30 days, you're gonna do it second nature just because it's a habit. I used to, when I first started, I know I hated looking at charts. I used to hate it. Then I also used to ask myself, okay, why did I lose trades? Well, you know what I'm saying? If I really like winning, this comes with it. I have to look at charts. I have to do chart markups. After a while, like I said, you're just going to build it in your brain where it becomes second nature. We're actually just doing it, and you're not even going to notice, because it's going to start becoming fun when you're actually figuring out how to trade for yourself and how to make your own calls. I know it doesn't sound like it, but later on, like I said, as you start making money from it and making good amount of money, you're going to want to do these things, and you're going to want to be able to trust your markups. You're going to want to take these things serious. That's the difference between you being able to pay rent for that month, or you have extra money on the side to do what you want to do in your life. You know what I'm saying? That's just the decision that you have to make and the effort that you have to put in to be like, you know what? I'm going to make this a priority. And until you do that, things are not going to change. You have to want change. You have to go out there and seek change, in order for change to happen, and make the initiative for that change in order to, like I said, further your trading career and put yourself and the people that are under you in the best position to win. So, yeah, like I said, made the same call with pivots. strong with pivots, right? I knew what they could potentially sell. It's been selling. I knew what this was a strong place it could reverse at. It's mentioned it right here. Strong pivotal reverse. So putting that in the tool, looking at my trading view, my own markup, then going back to look at pivots to see how they marked it up, and then looking at strong pivot to reverse, I knew at that point I needed to enter into the sell. Where does it say? Okay, strong pivot or reverse. So if we hop to the sell right here, what does this tell you to do? Right here, it tells you to take a partial close and sell. Why? Because it can potentially reverse at this point as well. What does it tell you right here? Take profit. So if you would have put your take profit at this line right here, you would have took profit and price would have started reversing. It literally gives you the keys that you need, right, in order to be successful. You know, like I said, at first I didn't do pivots, but now looking back on it, it makes things so much more simpler, right? Because when you understand this basic stuff, right, and then you incorporate that, and then you look this as kind of like a double check mechanism, where you're checking yourself to make sure you're right, make sure your support resistances are adding up. You throw those two things in there, you're gonna be unstoppable. So I think it's something that everybody should look into. Yeah, if you can't afford it right now, you know, that's completely fine. But down the road, when everyone's deciding to pursue this and they want to actually do this, I think that's something you should at least take a look at. Any other questions?
Definitely ask questions, guys. No, remember, no question is a dumb question. If there's something that you need help with, let's definitely ask. So go ahead and ask those questions, please.
Okay, so when it comes to the industry, would you say that pivots is something that it could be used on since the market switches up so quickly with those?
Yeah, so we can go to that right now. It's the same thing. Like I said, pivots, I mean, the only thing that's, the indices move, how can I say, indices move the same way. The only difference is, you have to keep in mind with indices, is that it's based off companies. So if, let's say Apple announces, hey, we just closed some warehouses because of the coronavirus, then the market's going to drop down. So, you know, it's dependent on that as well. But if you really think about it, the currencies are dependent as well, because the economy, if the economy's doing bad, right, then what is the market going to do? For instance, U.S. oil. The coronavirus is doing what? The coronavirus did this, right? This is what the coronavirus did. But what's the one? USD CAD. USD CAD. This is what the coronavirus did. That's potential news, right? So if you really think about it, everything is manipulated by news. It's just, like I said, the only different thing with indices is based off companies, right? So that's something you just got to pay attention to. Pivots is really good, regardless, because it can tell you overbought and oversold conditions. I'm trying to go to, okay, you're starting right here. So like right here, this is R8 right here. This is R8 right here. If you would have hopped in for the sell, you at least made something. Why? Because if you would have hopped in, you would have at least made, okay, I don't know exactly what that is. It says 3,000, but okay, you would have made, you could at least got 100, 200, 250 to 100 pips, right? Just off of that R8 sell. So like I said, I think pivots can work for anything. It tells you pivotal points where you can reverse that. Bottom of the range. But the only thing is, right now in the market, what's happening? Coronavirus is recovering, right? So you just have to keep that in mind. That's all you have to keep in mind. Use a fundamental analysis approach first with indices, and then back that up with your technical analysis. The overall picture of what's going to happen is the fundamentals. But the 1 hour, either 1 minute to 15, 13 minutes, that's straight technical regardless of anything. Price can go here, it retests this, keeps working its way up. Price can go here, retests this, keep working up. What do we know? We know the coronavirus is still recovering. Things are getting better, right? So what are we going to be looking for? If you know the coronavirus is, things are getting better, right? You know the market's going to start working its way up. So we know the market's going to be working its way up. We're going to be looking for buys. If we're looking for buys, we're not going to enter in where the buys are already happening. We're going to enter on the retest. Price comes right here. It retests, right? What does it do? Keep going up. Price goes right here, retests, keeps going up. So same thing with this. Price is retesting. What do we think? It's going to keep going up. Why? Because markets are covering. So you got to look from a fundamental analysis approach first, then use a technical analysis to back that up. That makes sense.
Okay.
Take a look at Nas. Let me take a look at Nas real quick. Technology is going up, right? So technology is going up, then we know we're going to be looking for buys down the road. So at this point, we wouldn't be just hopping in. We'd wait for what? Price just did what? Let me do that. Price just did what? Price just made a gap right here. What do you think? We think price could potentially fill that gap and then keep buying. So at this point, when price comes down and fills that gap, then we could possibly look for a buy. The one thing also I want you to keep in mind is I don't believe in trading on Sundays. I don't believe in trading on Mondays as much. Mondays are okay, but Tuesday, Wednesday, Thursday, Friday morning, that's when the most volatility is going to be going on in the market. The banks and financial institutions trade those days. You're going to be trading with the financial institutions. Why? That's when the most volatility is in the market. So what does that mean? Higher moves, bigger opportunities for money. So when you're trading with retail traders, a lot of things can happen. A lot of bad things can happen. A lot of things that are not necessarily in your hands can happen. So I rather trade with the financial institutions. That way, bigger moves can happen, and you can make your money very fast. Really fast. Anybody have any more questions?
Yes, I have two questions actually.
Yeah, go
One,
ahead.
do you trade during FMP week? And then two, so I know there's points in time where I've been on like the chart training, and y'all can like tell like, okay, this is like when you want to hop in, or it's about to do like a major reversal, I guess. How can we? Because I know how to look at my candlestick patterns and mark my stuff up, but how do I know like it's gonna like stay that way, I guess, for a longer amount of time than normal?
That's your time frames. You gotta look at your time frames, right? Why do you know that? It's like looking at this, right? If I was to come right here, right, and I'll be looking for sales. So think about this. Every time price comes to this trend line, it's on the downtrend, right? Price is looking for sales at this point. Every time it comes down, it's looking for sales when it comes to this line. Let's say I was to so every time price comes right here, it's looking for sales. I'm looking at the bigger time frame. Why? Because I'm trying to catch more pips. So I want to see the overall picture of everything. I go to the smaller time frame, right? It's just gonna be gibberish like this, right? It's not gonna show you too much. So you want to look at the bigger time frames to see the general picture of what's going on. We know right here, price is on the downtrend. Every time it comes to this trend line and resistance level, it's typically going to sell, right? So we're projecting to sell. If I would have just seen this right here on the 4 hour or the 1 hour, right, I would know the price is potentially going to sell. But if I looked on the 15 and the 5 minute, I would think, what? I don't really know what's going on. It could continue to still be going up. That's from looking at a small time frame perspective. You want to see that's why you do a top-down analysis. The top-down analysis, what that's going to do is give you the overall picture of what price is doing. You can work to the day, right? Work to the day, then work to the 4 hour, right? From the 4 hour, work to the 1 hour, right? So now it's confirming everything. As long as now we're confirming, we know price is most likely looking to sell. Price came down here, it retested this, it's most likely going to sell. If you looked at the 5 minute time frame, you'll just see this, or you'll probably do prices in a retest and then start buying. But now prices are eventually going to go down. So looking at those time frames, the higher time frames is what's going to be used to confirm buys and sells. Another thing you said, what was the other question you said?
Do you trade, like, do you
Oh, NFP
personally
week.
trade during FMP?
I like I said, I trade during NFP week because I have experience, and that's when the most volatility happens. I actually look forward to it. I believe if you don't really know what you're doing, I wouldn't advise trading it because a lot of things can happen, and you have to trade a certain way. You have to be a little bit more cautious, use a little bit more confirmations. But honestly, if you're not very comfortable trading it as it is, and you're not really experienced, I would say stay away from it. And I would literally just wait for the signal callers that are more experienced to call the trades. That way, you're using their analysis as opposed to your own. I think as time goes by and you start seeing what NFP week is, you can start making trades for yourself during that time. But right now, I wouldn't say that.
Thank
So, is there any more questions? Okay. Well, I'm gonna go ahead and swing the host back over to Jasmine.
All right, all right. And don't forget to save that so I can send it to them too. Thank you again.
Yes, I'm saving it right now as you speak.
Okay, awesome, awesome.